We have a quick question here from Shauno asks, how do we determine whether to hold a position over the weekend and when should we rather close it? So Shauno continues to say that we recommend it to hold a specific trade open over the weekend a couple of weeks back, and they ended up banking a lot of pips at the open the next week. So they want some more clarity on when exactly they should be holding and when exactly they should be closing. So thanks for the question, Shauna. So there's a couple of factors to keep in mind that will help you to determine whether holding over the weekend is in the best interests of that particular trade. So the first consideration is always just the time frame that you're trading. So if you're taking a swing trade, for example, and it's something that you expect to play out, over the next week or two, then the weekend should be less of a concern when compared to a day trade. As a day trade, you will ideally be looking to close that out at the end of the trading day or the end of the session, depending, of course, on the sentiment that you're trading. Now, having said that, there are times when even a swing trade also has a very big risk when it might be best to close it out before the weekend. So, for example, let's suppose that you have a swing trade running in something like the euro versus the US dollar, right? And you have a major event lined up over the weekend. So let's say maybe a general election, for example. That type of risk could cause such a big and significant market reaction that it would be in your favor or best interest just to close that trade out. But there's also times when you have a specific reason to hold a trade, maybe over the weekend. So let's take a situation where there is a negative sentiment driving the markets for a possible risk on or risk off. So let's take a simple example. Let's take the coronavirus, right? When the virus just started becoming a concern at the start of February 2020, there was a lot of negative weekend risk, but risks that could have been taken advantage of as well. So, for example, based on existing data at that time coming in, we knew that the virus was rapidly spreading, and once it reached a certain point, it usually started to escalate exponentially. So taking a risk of trade, like something selling like, let's say, the Aussie yen, and keeping that over the weekend could have banked you some decent pips at the open, because there was a really high probability that reports would go out over the weekend that showed exponential increases in cases, which would have created an ideal environment to expect a gap lower in the markets at the open. So there are times when the risk is big enough that it means you should rather wait for the announcement or the event over the weekend to play out and rather close out the trade. And then there are times when you can let your trade run or actually engage the market at the close on Friday to try and capitalize on the expected moves over the weekend. Now, the challenge with weekend risk, and the reason why it's usually best to de-risk into the weekend, is because literally anything can happen over the weekend, right? And it's something that happens, if it's something that happens on a Saturday morning, for example, the market will have the whole weekend to mull over that particular event and build up a specific risk for that event over the weekend. So let's say there's reports over the weekend that two major developed nations had a accidental military scuffle. So let's say fighter planes crossing certain waters, and it ended up in a dogfight, and one of the planes were gunned down in the process. Now, let's say 2 hours later, you hear that there were further developments as the two nations start to blame each other for the scuffle and now start to threaten further responses. And 2 hours after that, you hear that the two nations have actually lifted their war alert statuses and have sent nuclear capable bombers to within striking distance of each other. Obviously, this is just an example, but imagine that type of situation has the whole weekend to unfold and the market has the whole weekend to brood over that particular event. Basically, when you have the market so on the nerves, how do you think the market will react at the open? So you expect to see a massive gap to the downside, and that's obviously for a negative catalyst, but it can be the same for a positive one, right? So let's take the trade deal saga that's been going on for so long. Imagine that you were in the middle of the trade negotiations, and on Saturday, there's a report coming out saying that there's been a breakthrough. President Trump called Xi, and they kissed and they made up, and everything is just hunky dory, and it looks like a deal is possible. and then 2 hours later you hear that, okay, they've actually phoned, they've agreed to certain preliminary elements of the deal, and it looks like they're going to sign it the next week. How do you think the market will open? Of course, on Monday, that's going to be a massive upside jump. So, just always imagine how those types of very positive and negative things can impact the market and the open, and that should explain why weekend risk really does pose a lot of risk for any open trades we have. Now, also imagine that there was, let's say there's a very positive expectation for an economic data point that's coming out on the Monday, and you decide that you wanted to trade into it by taking a buy trade, on maybe the S&P 500 on the Friday, and imagine that the situation we just described happened. So obviously, if you're trading that to the upside, you're going to be happy if it's a positive one. But if you're trading it to the down, to the upside, and it's a very negative catalyst, like like we described with the military stuff, then that can really pose a lot of risk. And sometimes the market can actually open up below your stop price, right? So you can have that gap opening up below your stop, which opens up a lot of risk for that particular trade that you're in. So, due to the uncertainty of what can happen over the weekend, and the fact that the markets are basically sitting ducks until the open, means that it can create a lot of stress and unwanted drawdown, which is why most traders prefer to just de-risk going into the weekend. So it usually only takes one or two big losses that you suffer over a weekend at the open, when the market gaps to basically lose appetite for holding things over the weekend, without a very good reason, of course. So just always keep that in mind in terms of your swing trades and your day trades that you plan to take over the weekend. So hope that helps, Shauna. Any other questions, don't hesitate to let us know.